Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. Happy Monday, Scarlett. Is the Trump trade still on?
I think it kind of depends on the personnel. Do we have a Treasury Secretary yet?
Not yet.
Incoming Treasury Secretary.
On that note, let's get to the biggest stories right now in the more than $14 trillion global ETF industry. And as we were saying, yields marching higher right now. Investors are anxious about a rate cut in December, whether that's going to happen. They're also wondering who President-elect Donald Trump's pick for Treasury Secretary actually will be.
But with ETFs potentially set for another year of record flows in 2025, we're going to speak with Nasdaq's Alison Hennessy about what's driving that boom.
And as leveraged ETFs grow, a fund tracking the performance of Berkshire's Class B shares may be on the way. All of that and more coming up. But as always, Eric Balchunas from Bloomberg Intelligence, he's here with us now. He's looking at the flows. Eric, what do you got?
Katie, Scarlett, the Trump trade, I don't know if it's over or not, but the Trump flows are in full effect. You know, equities kind of feel a little gassed. You know, they're up 24% this year. So how much further can they go? Well, ETF investors are doing their best to help out. $8.3 billion into SPY is a lot. I mean, that's a lot of money. 5.6 into VU. By the way, VU is at like 95, 96 billion on the year. That is absurd, right? The old record for an ETF is 50 billion. So we're almost double the record for VU. That's a great story of the year. The Q's 2.9 billion and IBIT, right? Bitcoin ETF. You know, if you asked me to describe the flows since the election, I would use the same phrase to describe the flows all year. Beta with a side of Bitcoin. Basically, that's sort of what we're seeing all year. And then some other ETFs down there, including equal weight equities. Let's look at the outflows here. You're going to see a lot of outflows out of TLT. I call this the siren song for people who think too much because people love trying to outguess the Fed and what's going to happen. People piled into this. Now they piled out, right? I think it was just not an obvious trade. IVV, some outflows here, so not totally all in bullish on every single S&P ETF, and VTI and HYG. So a touch of outflows here from risk on, but largely they are risk on net-wise. Let's look at the total flows year to date because this is exciting. We have officially broken an annual record for ETF flows with 4 or 5 weeks to spare, right? So 916 billion year to date. I know it doesn't quite look at it, but that's 910. So we are already in record territory in flows. This goes for other regions too. So globally, ETFs are in record territory, and the launches are in record territory. So, Katie, not only a record, but a real shot at $1 trillion for the first time ever.
Yeah, all eyes on that $1 trillion. I think we have to throw a party when that happens on this show. So, yeah, fingers crossed there. Eric, thank you. Joining our conversation now is Alison Hennessy. She is head of ETP listings over at Nasdaq. Great to have you in person with us.
Yeah, thanks, Katie. Thanks for being here.
So, Eric was talking about record flows. It's not just flows. We've had record launches as well. You think about the business that you're in. How many of those new launches are listing on the Nasdaq?
Yeah, it's been, you know, like Eric said, record-breaking, just continues to be the theme year over year within ETFs, both with flows as well as new launches. So looking back to 2023, our team at the Nasdaq has already helped list over 43% more ETFs in 2024 than we did for all of 2023, and we're not even into December yet. So numbers are incredibly high. We continue to see, you know, the established ETF issuers continue to launch ETFs within their business, but very exciting. We continue to work with, you know, whether it's global asset managers that are launching ETFs for the first time or smaller firms. So for us, it's a lot about education and, again, partnering with these issuers to bring new, exciting, innovative products into the market.
And some of the innovative products include options and risk management ETFs. And you had a 2024 ETF investor survey, which surveys about 2,000 retail investors, which found really that it was Gen Z and millennials that are the driving force behind this particular flavor of ETFs.
Yeah, absolutely, and truly ETFs across the boards. This is the third year that we've conducted this this survey. About 45% of Gen Z's financial advisors are investing in ETFs on their behalf, and then from a retail perspective, about 80% of all Gen Z investors are utilizing ETFs in a large way, whether that's beta ETFs, and then really getting into this more sophisticated, complex area of risk-managed or options-embedded strategy ETFs. I think the component of the income that you can receive from these products, as well as the risk management component, you know, I think investors have really shown these are the types of products that they're looking for. A third of all the ETF launches that we've seen in the second half of this year have some type of options component to them.
Speaking of options and things young people like, let's talk about the Bitcoin ETF. IBIT is you're the primary exchange for IBIT. So
Yes.
you have basically the greatest launch of all time up and running on your exchange. And now we just got word over the past couple days that after the SEC approval, CFTC has approved, and OCC, I'll let you deal with those acronyms, but this is like the bureaucracy that you have to go through to get options to be approved, especially for a 33 Act ETF. It's a little tricky, but it looks like all systems go. When can investors and traders expect to have options on IBIT and the other ones?
Well, first, I couldn't agree with you more, Eric, on the success of IBIT and really all the spot Bitcoin ETFs that we've seen come to market going back to January. IBIT now over $40 billion, larger than the iShares Gold Trust ETF. It's, I think you pointed out last week, larger than the 2,800 ETFs that have launched in the past decade. So what a momentous milestone. The options development on IBIT is something that we've been working on over the past 10 months with BlackRock, with the regulators. And so, as you said, over the past few days, the CFTC did put out an advisory on their stance with these with the options listed on IBIT. So we're working very closely with BlackRock and the OCC on these final steps. We've put out the necessary listing application documentation. And so our intent at Nasdaq is to list and trade these options, as early as tomorrow. So it should certainly be an exciting week. It was exciting enough to have these spot Bitcoin ETFs launched earlier this year, and then we had the Ethereum ETFs in July. So I think kind of this next step is just rounding out that digital asset ecosystem for ETF investors.
That's really interesting. So potentially as soon as tomorrow, watch this space. You mentioned that this is something you've been working on with BlackRock and the necessary parties for 10 months. You think back to the experience with the Bitcoin futures ETFs. It didn't take long at all to get options listed on those funds. I don't know if you want to speculate, but do you have any opinion as to why it took this long?
Yeah, I mean, no real speculation. Like Eric said, the structure of the 33 Act that these spot Bitcoin ETFs are structured in just is some added, regulatory, approvals that need to be had. But again, up until this point, like I said, our, strong engagement with these different regulators as well as the BlackRock team led us to this, successful, decision. And again, getting these options listed on IBIT into the market, I think will be, very exciting for investors because that's really what we've heard from them.
I want to ask about the Nasdaq as a favorable place to list overall. Palantir changing its listing from the New York Stock Exchange to the Nasdaq. The stock surged 11% to a record high in the aftermath of that, which means that once it joins the Nasdaq, it can join the Nasdaq 100, which gives it entry into the Qs. What does this say about demand for Qs and Q-based products?
Yeah, absolutely. Well, to your point on Palantir, obviously not an ETF, but a large corporate listing transferred to the Nasdaq. We're very excited about that, and I think that speaks very strongly to the Nasdaq brand. I think it really just goes to show, even within our ETF business, the types of exposures and brand partnership that we look to bring to ETF issuers. Like you said, the Nasdaq 100 and Q-based products are. That's a lot of the exposure that we're working on with ETF issuers. I think specifically in that options embedded ETF space, there are a number of products that license the Nasdaq 100 or are providing that tech exposure as the benchmark with these, active options overlay on top of it. So, and some of those products have grown exponentially. Of course, the Qs continues to be a very actively traded and investable product. So absolutely, I think corporates are seeing the value of being a part of the Nasdaq 100, both getting access to institutional investors as well as to the ever-growing retail trading community.
You talked about the Qs. You brought it up, Nasdaq 100. It's interesting. This is not an ETF that is, quote, beta. It's not necessarily tech, but it is a juggernaut. We call it the eighth wonder of the world on the team because it just seems to be so relentless every year. My theory on why Nasdaq and the 100 is just such a powerful index is after Steve Jobs listed Apple there, everyone loves Steve Jobs, especially founders and visionary types, that he just got a cascade of these types of people to follow him, Bill Gates, Elon Musk, et cetera. And that's what it gives the Nasdaq 100 its oomph. Thoughts?
Well, just major credibility, I think, is a piece of it. When we talk to ETF issuers about where they're looking to list their products, people certainly, of course, ask us, how do you choose which exchange to list on? Brand alignment and, that type of partnership support is a lot that goes along with it. As you said, I think Nasdaq has really well aligned itself, both in terms of corporate listings as well as ETF listings around innovative, exciting new products that are coming to market, both, tech focused and otherwise. So I think it just continues to speak to how us as a company, as well as an exchange, continues to, kind of move the path forward, looking to work with different types of issuers.
Well, just really quickly, you bring up where I want to go, and that is the competitive advantage. I mean, how do you entice issuers to launch with Nasdaq versus NYSE versus SIBO, for example? Does it come down to fees? Is it something else?
The way we think about it, working with, again, but whether it's established ETF issuers or newcomers into the space, we look to provide a very holistic, comprehensive client support model. A lot of that comes down to, as I mentioned, brand, partnership, and awareness, but really also around education. We like to start these relationships, especially with new ETF issuers, as early on as possible, talking about our liquidity programs, the market maker community, different types of exposures we're seeing. So we see it as a very holistic model. Where do you see someone being a strong partner to you, not just to list your product, but throughout the whole life cycle of your ETF? And I think we've done a really, really great job building our brand. And like I said, we've launched 43 more ETFs this year than 2023, and the year's not over yet.
All right, that's a good place to leave it. Hope to have you back again soon. That is Alison Hennessy of Nasdaq. This is Bloomberg. Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we actually start with money market funds, because I love this fact. You had U.S. money market fund assets surpass $7 trillion for the first time ever last week. This is according to Crane data. Of course, we know that there's plenty of intrepid ETF issuers, including BlackRock, who have launched money market ETFs or filed plans to do so. So we'll continue to watch this space. Let's talk about performance, though. This chart, courtesy of Bloomberg Intelligence, you're looking at ETF performance, and it's never been better, or just about. This is the number of ETFs with double-digit gains so far this year. You can see 1,666 funds have posted that sort of performance. You compare that to what we saw in 2018 and 2022, some very hairy years. Obviously, the past 2 years have gone pretty well. Let's talk about some planned funds as well. We had an interesting filing in the past couple of weeks from a South Korean brokerage and Title Investments to list a 2 times leveraged ETF of Berkshire Hathaway's Class B shares. This is interesting to me, Scarlett, just because it's so boring. Typically, these single stock ETFs, they follow these very volatile stocks, and that's part of the fun. They move around a lot. Berkshire Hathaway shares, surprisingly, not too volatile.
So you got to wonder what's behind all of this. Let's talk about this with Bloomberg's Vildana Heinrich. So Vildana, Katie makes a good point. You have Tesla and NVIDIA. These are stocks that are volatile, and there's a lot of demand for leveraged ETFs based on those companies. Who wants a leveraged Berkshire ETF?
I'm really not sure. I checked the price action for Berkshire B shares right before we got together, and it was up 0.2, I think, for the day. And then I checked MicroStrategy, and it was up 11%. And that's after, like some really, really big crazy moves the last 2 weeks, up 20. It's not unusual in the last couple of days to see it up 20 or 25%. And then you think about the leveraged ETFs that are based on a MicroStrategy or a Tesla or NVIDIA. And just how popular, massively, massively popular they've been, because the underlying moves of the underlying stocks are just really crazy, big double-digit gains that you can see. And then the ETFs sort of provide you that
extra rush, right?
Exactly.
I put some numbers to it. I wrote about this in the ETF IQ newsletter. Class B Berkshire shares, their 90-day volatility is 19%. MicroStrategy, do you want to guess what it is?
28%?
97%.
Yeah, it's above 90.
It's just wild. And I mean, there are Berkshire Hathaway single stock ETFs out there just in Europe. So
yeah, I don't know. It's just an interesting thing. There was a quote in the story from Title, from somebody at Title, that said, traditionally the lion's shares of interest goes towards the NVIDIAs and the MicroStrategies, et cetera. We'll see what the appetite is, for this type of product. And indeed, we'll see. I mean, part of the story is that a lot of the leveraged ETFs are super popular in South Korea, actually. Yes. And the retail investors there love leverage. There's some ETFs that they're that South Korean retail investors are like they own 30% or more of certain Tesla, juiced up Tesla ETFs, for instance. They really, really love. So we'll see. They love as do American investors, the craziness.
So there could be an audience out there for this
Kiwoom
fund.
Securities knows its audience, right? Korean retail investors like leveraged ETFs. They also like Berkshire.
They
so
do like
put them
Warren
together.
Buffett.
All right. Vildana, always a pleasure. Thank you so much. Bloomberg News' Vildana Heinrich. Now, still ahead, we're going to drill down into an energy infrastructure ETF with Paul Baiocchi of SS&C Alps Advisors next. And just a reminder that you can listen to Eric and Joel Weber on Trillions, their podcast that covers the industry. This is ETF IQ on Bloomberg. This is Bloomberg ETF IQ. I'm Scarlett Fu, along with Katie Greifeld.
And Eric Balchunas from Bloomberg Intelligence back with us now for today's drill down, where we focus on one ETF. Eric, hit it.
Katie, today we're looking at an MLP ETF. You know, I kind of forget about this category. Every couple of years, though, they come out with a vengeance. And this year, MLPs are doing really good. So this is the Alerian Energy Infrastructure ETF, ticker ENFR. So this is going to track pipeline companies, MLPs, although some are C Corps, but we'll go more into that in a minute. It came out about 10 years ago, so it's pretty old. 35 bips, relatively low cost for that category, 220 million. So, you know, sizable, like I'll call that middle class of ETFs. Let's look at what it holds here. Now, it's interesting, like AMLP is the sort of big daddy of the category. So this one's more of a newcomer, but you're going to see if you're, you know, a student of this area, there's going to be more C Corps here than MLPs, and these are also more midstream. Those two things have helped these stocks do better than other MLP ETFs. I'll show you what I mean. If you look at the performance of this one versus AMLP, which is, again, the most known one in the category, and then here's XLE. I threw the energy ETF in there and SPY. This thing is just destroying it. So it's double the performance of AMLP. We'll go over why in a minute, and then it's destroying XLE, which is energy companies, and then SPY, which is up 25%. So just having an amazing year, you know, quietly, Katie, this is an area that hasn't gotten much attention, but is really having one of its best years.
Yeah, absolutely. Eric, thank you. Let's keep this conversation going with Paul Baiocchi. He is Chief ETF Strategist over at SS&C Alps Advisors. So like Eric said, just crushing it on the performance front. You take a look even since the start of November, and this ETF is up nearly 9% on a total return basis. Wrap this into the Trump trade. It seems like we've seen everything energy take off. What is the outlook under a Trump administration for this ETF?
Yeah, so as base, these companies are providing a very critical economic function. They're connecting production to consumption of crude oil and natural gas. They're doing things in between that, like processing and storing as well. But at their core, they provide infrastructure for our energy markets. And in theory, part of the Trump platform, part of the Trump policy proposal has been to open up more opportunities for development and production of crude oil and natural gas. So in theory, that leads to more volumes. And these companies earn fees based on volumes. It's not a spread play, the difference between what you produce it at and what you market it at. It really is a very stable business model with some inflation protection as well. And so in theory, more production begets more volumes beget more fees beget more revenues, which has been the lifeblood of this story.
Certainly sounds like a compelling narrative, that relative stability of the midstream business, as opposed to getting whipsawed by the price action in oil futures. But what do you give up for that?
Well, you definitely give up leverage to a rally in crude oil prices especially. And so if you look at XLE, which is one of the charts that Eric had up there, that is very much dominated by Chevron and Exxon. It's 45% or so of that portfolio, followed by a lot of services companies. In fact, midstream only has 4 names in the S&P 500 within this category. They've been responsible for more than half of XLE's total return year to date. So the trade-off is you get less leverage to a rally in crude oil prices, but the benefit is you get some defensive orientation within energy. You get a consistency in terms of your free cash flow profile. And unlike energy, which has had negative earnings growth this year, you've seen positive earnings growth, EBITDA growth, and distribution growth in the space. And so in many ways, it's a way to orient towards not just the near-term policy proposals of Trump, but it's also an adjacency on the electricity stories. So we've seen utilities, third best performing sector in the S&P 500 year to date. A lot of that is on the back of a re-rating and expectations that we're going to see increased demand from data centers and the like. Natural gas is the most important input into electricity generation. If you look at ENFR relative to AMLP, part of that spread in terms of year-to-date performance, I think, comes from the fact that you're starting to get a re-rating of expectations around natural gas demand. Sam Altman, ChatGPT, said we need five gigawatt data centers. That's a massive amount of electricity that just tied to that one theme, notwithstanding EV and other adoption.
Yeah, no, the AI theme is big. We also think it's good for uranium, but that's something to watch for sure. Now, the spread in the return is clear. There's also a spread in the yield. Now, when I think of MLPs, I think of people going for yield, but this doesn't quite yield. This yields 4% versus AMLP yields about 7-8%. What's the difference between the C Corp, MLP, and the yield issue with these?
Yeah, and you're an ETF nerd, and so I'm not going to get too far in the weeds here for the audience, but in order to be 100% MLPs, you have to structure the ETF as a C Corp. And over the course of the past 10 to 15 years, a lot of companies that were MLPs are now C Corps. They've either been acquired or they've converted or they've rolled up into parent companies. So there's fewer MLPs than there ever were before. C Corps now have more exposure to some of these long-haul natural gas pipelines. For example, that Transco pipeline that starts down in Corpus Christi runs into New York City, providing natural gas to bring the lights on in this building and other buildings. And so that's actually a reversal this year. MLPs had been outperforming C Corps over the past couple of years, so you're getting a little mean reversion there, but there's also a broader capital pool. This is ETF IQ. We're talking about the growth in ETF assets. MLPs aren't in the S&P 500. They're not eligible for inclusion in many of these indexes that then translate to increased flow. So there's an incremental sort of buyer of last resort for C Corps that doesn't exist for MLPs.
What kind of demand have you seen for these particular ETFs since the AI story really began percolating?
Yeah, so AMLP has north of $1 billion in flows year to date. We've seen year to date inflows into the RIC compliant midstream category where ENFR operates. And it's been a story that in some ways people are coming back to, because Eric said he forgot about them. I think a lot of investors got burned by MLPs in 2014 and 2018. And these companies, MLPs and C Corps, have radically changed their fundamental profile, generating strong profitability. Valuations haven't budged at all. So demand has been really good so far.
All right, Paul, got to leave it there. Really great to see you again talking about a forgotten, underloved sector, perhaps. That is Paul Baiocchi of SS&C Alps Advisors. And that does it for ETF IQ. I'm Katie Greifeld along with Scarlett Fu and Eric Balchunas, and this is Bloomberg.